The largest loan that we did, it's a resident guy buying a 1 billion yen apartment, and he just doesn't have access to Japanese banks. We lent him 526 million yen. I understand that yen loans is a little bit more expensive than what I could get if I were a local Japanese, but I'm not a local Japanese, and I don't want to have to sell asset that's making 20%.
Don't buy all cash.
Yes.
I tell people all the time, don't buy all cash if leverage is available.
Yeah, totally.
Because you can get better rates on
Yes.
your money outside of Japan, anywhere else.
Buying property in Japan is one thing. Financing it as a foreigner is another challenge entirely. In this episode, Emil is joined by Mark Drabkin, founder of Yen Loans, a specialist lender helping foreign buyers finance Japanese real estate. Together, they discuss why many foreigners struggle to qualify for Japanese mortgages, how alternative lending works, when financing can outperform paying cash, and what opportunities Mark sees in Japan's property market over the next few years.
All right, Ma, thank you for your presentation just now.
Thank you. So good to be here.
Can you tell me a bit about Yen Loans and the business that you started?
Sure. I've been working on this for 3 years. First year was mainly due diligence. Second year was negotiating funding. Everything took longer than I expected and costed more, which is probably true for all startups, but we're finally up and running. We extended our first loan on January 31st. We did a couple in March. We're closing 2 next week. We've got a few in the pipeline for May, so it feels like a pretty opportune time to be here, presenting and trying to issue loans.
Yeah, no, fantastic. I remember I came to your office for a meeting a few months ago, just before you had gotten your first loan. That was like,
we're real.
early days. Yeah, no, fantastic.
We're not a scam.
So definitely congratulations on the very first one. It's very, very tough to get, I think, licensing done in Japan as a money lender.
Yes.
Regulations are really, really strict.
Yes.
Okay. So what kind of properties are you lending for? And what's your ideal sort of clients look like?
Sure. So we started out only lending in Tokyo 23 wards. From April 1st, we've expanded to the whole greater Tokyo, parts of Kanagawa, Osaka, Fukuoka, and Nagoya. Oh, and Sapporo. We only rent on condominiums. So that's, we want to be able to do houses and whole buildings, but I think that's probably a project for next year.
Yeah.
So we can lend on any condo built after 1990 in those areas.
Okay. Yeah, that was going to be my next question. Where do you see the big changes happening in the next 12 months for your business?
We're working on a Niseko lending product. I'm not sure if we're going to be able to get financing for that, but we know there's huge demand.
Yeah.
So if we could do that, that would be really good for our business. I'd like to be able to do houses, but the required due diligence on a house, and obviously for a building as well, is higher. And so we need to find a way to get house financiers comfortable with it. And also, frankly, figure out a loan product that works for us just in terms of the amount of work required for each loan, which frankly probably means higher minimum loan amounts for houses. But I'd like to do that. I think it's a 6 to 18 month project from here.
Okay, interesting. Could that be something that just maybe brand new houses, are they easier to sort of do than use existing dwellings? Or is that much of a muchness from your end?
I don't know. I don't know. I mean, we only lend 50 to 60%. So that actually gives us a lot of protection.
Yeah.
It's, layering on the additional property underwrite in a way that, works for us, but is also works for the financier and the borrower, like figuring out kind of like the intersection is the tough part.
And where are most of your clients coming from? Because your product is very niche. You lend for real estate purchases in Tokyo and now some other major cities to basically non-residents. And they don't need to live here, don't need a bank account here, don't need to have ever step foot in the country.
The business started as a non-resident lending business. And I think that will always be where most of our clients come from, but we have realized that there is a decent population of resident foreigners who don't tick the boxes for Japanese banks, who will also borrow from us. So for instance, the largest loan that we did, it was the third one in the presentation we made. It's a resident guy buying a 1 billion yen apartment, and we lent him 526 million yen.
Yeah.
And he just doesn't have access to Japanese banks. So when we started this, I hadn't really thought that would be an opportunity, but the way I say it is, like for the loans that you introduce, if you check the boxes for Japanese banks, it's a great lending product. But if you don't check the boxes, then you can't get financing from them. So that's an opportunity for us.
Yeah. Oh no, fantastic. What's one mistake that people make that weakens their financing options?
We're a new lending product, so people don't know that much about us. And I think that if we had been involved in the process from when they started their process, it would have been smoother. So for instance, we don't finance houses.
Yeah.
So if someone comes in and they've gone down the path of having Emil show them 10 houses, and they're like, oh shoot, well, I was hoping for financing, or in a positive way, I didn't know I could get financing even though it's only on a condo, then they kind of start the process over. So I feel like, the opportunity for us, like, what we can finance. If you can steer people to things that actually might work. And so, it's not really a mistake, I'd say, but if we're involved in the process from early on, we can get a buyer comfortable with the amount that they're going to be able to borrow, and you can factor that into your property showings.
Yeah. I think it's already been like a handful of properties I've been emailing to Wyatt to just do like a tacit assessment.
Yep.
So does this fit your mold?
Yeah.
Can you cover this? Yeah, and then I can present it to.
Please do that,
guys.
That's greatly appreciated.
Yeah. No, that helps me a lot, because then I can tell the clients, we've got this, and this is kind of what we can get for you already.
You can basically, it's like as an asset, this is pre-approved. Yen Loans has said they'll finance it.
Yeah, and I'm actually thinking of going sort of almost a whole category of that, like a dozen properties or so. Send them to Wyatt, say yes, no, yes. Approximate valuations, and then put it on the site and go, all right, this is what we can get for this. So foreign investors can look and go, oh, okay,
yeah,
this is it.
Yeah, and the way
catalog in advance,
that would be awesome. And I think the way, you know this, it's the same the obvious, but like, I think buyers come to the table with a budget.
Yeah.
And so, if they have 100 million yen, then they can either buy something all cash through you for 100 million yen, or they can do it with us alone and buy something for 200 million yen.
I try to pitch that exactly to so many people about financing. If someone's comparing buying cash versus using leverage, what are some things they should think about?
Our rates are high by Japanese standards and quite low by international standards. So I think the things that people kind of think about are, first and foremost, how big is the budget and how important is the budget? In an ideal world, you'd have unlimited money and you wouldn't have to borrow at all. But if you really think that your family is happier in a house which is 200 million yen rather than 100 million yen, we're a good option. In terms of that decision whether or not to borrow, what we find, especially with surprisingly wealthy people, like even billionaires that we deal with, is they're very focused on what their money is doing. And so the sophisticated guys, like, I have money in a hedge fund, which I think can make 20%. I understand that Yen Loans is a little bit more expensive than what I could get if I were a local Japanese, but I'm not a local Japanese, and I don't want to have to sell my asset that's making 20%. It's very much a decision based on what else could their money be doing rather than being purely invested in real estate.
Yeah, and I think that's a big gap I find between people that have a lot of wealth and the people that don't understand how money works, is they don't realize that the cost of putting in the cash versus cost of leverage.
Yes.
They can pay 4% versus 2%. As the Japanese banks versus, the Yen Loans offer. Don't buy all cash.
Yes.
I tell people all the time, don't buy all cash if leverage is available.
Yeah, totally.
Because you can get better rates on your money outside of Japan, anywhere else.
Yes.
And foreigners have access to outside markets. We have bank accounts.
Also, if you're optimistic on Japan real estate, which you probably should be if you're buying it, like, you want to get something bigger so you make more money.
Precisely. So,
okay.
All right, Matt, thank you so much, man.
Thank you, man. Good to be here.
A big thank you to Mark Drabkin from Yen Loans for joining us and sharing his insights on financing property in Japan. To learn more or get in touch with Mark and the Yen Loans team, check the links in the description. If you found this episode helpful, like the video, subscribe to the channel, and let us know your biggest takeaway in the comments. Thanks for watching, and we'll see you in the next episode.